Hello everyone, my name is Lachlan. I write for Money Morning and I'm also an analyst on Exponential Stock Investor, which I would encourage you to learn more about. Today I'm going to run you through a few charts and talk about the article. So today we have a discussion of medtech, and this is the chart for IHI, which is the US medical devices ETF. It's been on an immense run, and if you have a look at their holdings, they have a 13.5% weighting towards ABT, which is Abbott Laboratories. Now, what's Abbott Laboratories chart been doing? Well, it's been on a multi-decade run, and this is in part due to the fact that it does heart disease and diabetes medical devices. Now, if you take a look at the long-term trend for medical devices specifically related to these two things, well, it's encouraging because, well, it's not the best because many people are getting these diseases. But for example, diabetes, you see a massive long-term uptrend through to 2030. And then it's the same with indirect and direct costs of cardiovascular disease in this chart through to 2030. And so that explains what's been happening with IHI and ABT. And the Australian market has seen some major medtech winners such as PolyNovo and Cochlear. And both of these companies work in different fields, but they've been the immense growth stories of the last few years. And so I sort of gently suggest that medtech is due for more money post-pandemic, partly because of the fact that the healthcare systems will need to find efficiencies. In effect, this terrible, awful pandemic has shifted resources towards the immediate problem, but long-term, there'll be a whole host of, or backlog of issues which will need to be addressed. And the companies that can provide these efficiencies will potentially benefit from this backlog. And now I want to take you through a few things, what's happening with Bitcoin, the Aussie dollar, and the gold price in both US dollar and AUD terms. So here we have the Bitcoin price in AUD terms, and you can see it has been on a downtrend there, a sharp sell-off in March, and then another downtrend here, shorter and less steep than before. And the chart for gold is quite different. So you can see the chart in AUD price. It's struggling to break through about 27.20, which is the resistance there. It's hit the resistance 1, 2, 3, 4, 5 times. Now is an uptrend as I guess the market starts to edge lower. And then let's have a look at the price in US dollar terms. Now, the interesting thing about this is that it's a, I guess, more bullish chart, sharp sell-off in March, and then it's been on a steady rise. And part of the reason this is that the US dollar, at least in terms of the US dollar index, has sold off significantly. And this is a index which tracks the strength of the US dollar against a basket of currencies. Now, it's heavily weighted to the euro, and as has happened before in similar market panics, people fly to the US dollar, and you can see this massive spike on the DXY in March, and it's been steadily edging down, which I think is flowing through to the price of gold in US dollar terms. And if you take a look at the Aussie dollar, the interesting thing here is that it's been on a long-term downtrend before February and the March market lows, and it's now spiked back up. But you could probably say that there is some form of resistance at around 70 cents. Now, it's sort of struggled to break beyond that, and it's possible it may stay in that range. And of course, we know that a weaker Aussie dollar feeds into the strength of the gold price in Aussie dollar terms. So there's a potential, I guess, opportunity there for the gold price in Aussie dollar terms to improve and continue on this uptrend. So that's all for this particular Monday morning weekend edition, and we will bring you more video content next week. Stay safe and enjoy your weekend. Thank you.